What a flip. Today started off kind of as just a, mediocre kind of bad day, like nothing too crazy, right? Well, you ended the day, in a rough place. Tesla stock down about 5%. NASDAQ down 1%, S&P down 1%, Russell 2000 down 1.5% today. What happened? Why did the selling get worse throughout the day? What happened for Tesla? Why was Tesla down 5%? There is some news specifically related to Tesla I will share with you in today's episode. Now, what we're also going to do is look at the economic data coming out tomorrow. Part of what happened today was due to the economic data this morning. This is why I said in the video earlier, it's in the title, don't be fooled, because these red days can fool a lot of people, spook people out of their positioning, when in all reality, today was a great day. Not like price action wise in the markets, not for Tesla, but the news itself was great. We'll discuss that in today's episode as well. Hit the like button, subscribe to the channel if you have not done so already. Check out the link down below in the description of today's episode if you want to come join the trading community. What we're doing over there is going out in the marketplace, finding smaller cap AI companies that are quality names that Wall Street is overlooking, right? These are 1 to 3 year time horizons. The faster they materialize, the better. Some are faster than others, obviously. But that's the idea. You actually make money when you buy a stock, not when you sell it. And people get confused on that. If you buy a company at the right price, quality company, you do your work and due diligence, you've actually made the money when you bought the stock, not when you sell it. If you bought the, Yahoo or whatever at the height of the .com bubble, you lost all your money. If you bought the company in 1996, you made a shit ton of money and likely got out before it went bankrupt, or pretty close went to bankrupt. You get the idea, right? So come join it if you would like to, link down below in the description of today's video. But we have a ton of work to do, so let's get started. So we talked about this in the last video, but I want to highlight it here because it's one part of why markets sold off today. It's part one. There's a part two. We'll get into that in just a moment. Part one was really freaking good economic data. Durable goods orders month over month came in at 2.9%. The expectation was negative 0.5%. GDP growth rate was expected, final numbers for Q2, at 3.3%. We came in at 3.8%. Durable goods orders excluding transportation came in at 0.4%. The expectation was 0%. Initial jobless claims came in at 218,000. Expectation was 235,000. The damn trade deficit for August came in at 85.5 billion negative. The expectation was negative 95.65 billion. Everything came in better than expected today. Literally everything. Kansas Fed Composite Index came in at 4. The expectation was negative 2. Kansas Fed Manufacturing Index came in at 4. Expectation was negative 5. Here is where you don't want to get fooled, okay? This is where I see a lot of people get fooled. They assume if the markets go down on a day like today, that it was bad news. No. Or that you want to see bad economic data. No. I don't know how many times I have to say this until we all kind of get on the same page. Good economic data is always, not sometimes, always good news. Always good news, no matter what is going on out there, okay? If you see stocks sell off on really good economic data, that is not a reaction that's going to last, okay? 2022 was a little bit of an odd year because we had the rapid rise in inflation. So don't draw parallels to 2022. That was a weird year. In this environment where Wall Street is kind of nervous about the economy and recession and growth slowing down, to get data like this is the best possible outcome. Why? Because at the fundamental basic level, stocks go up on earnings or they go down if earnings are bad, right? That's the fundamental back to basic principles, right? Earnings drive markets. Okay. And then multiples are driven by interest rates. They're driven by other things, right? The strength of the economy directly correlates historically to earnings. If the economy is good, earnings should be good. If the economy is bad, earnings should get worse or be bad. Okay. So good economic data is always good for earnings and is always good for markets, especially right now on a day like today, where, yeah, we had really good economic data. The odds of a rate cut in October, yesterday, 97.4%. Today, 86.4%. We're still going to get a rate cut, guys. Like, we would have to see inflation come in wildly hot and the economy start to do really good to not get a rate cut in October. Okay. So, again, as I've said before, rate cuts are not instinctively bullish or bearish. The reason why the Fed is cutting rates is what is bullish or bearish, right? If the Fed is cutting rates before a recession to avoid a recession, the economy is doing okay. That's good. If the Fed is cutting rates because we are going into a recession, that is bad, and stocks will sell off even if rates go to zero. So I think part of it has to do with a little bit of overreaction on the algorithm's part and the fact that we are in this September seasonal weakness. So that's part one. Now, tomorrow, we're going to get some economic data as well that's going to be very important. Core PCE price index month over month. We're expecting 0.2%. What if we come in at 0.1% or 0% or negative? If we have a big downside surprise, I expect we're going to have a really positive reaction in markets tomorrow. Okay. Personal income month over month is expected at 0.3%. That's not really going to do much for markets. Personal spending month over month is a big one, though, because people spending money is like 70-ish% of economic activity. You need people to continue to spend money. Based on the numbers we got today, especially durable goods orders and advanced numbers for the deficit, it looks like people probably spent a good amount of money, right? So probably room to beat those expectations. Again, the expectation is 0.5% month over month for personal spending, and that would be unchanged from last month. So pretty good number. We will also get final numbers for Michigan consumer sentiment, 5-year inflation expectations, 1-year inflation expectations, current conditions, and consumer expectations. So tomorrow is going to be a big day, okay? But all of that is part one of why stocks kind of took a nosedive today. Part two likely had to do with this news that came out. It directly correlates to when stocks started to really sell off. It says, breaking, Europeans privately tell Russia they're ready to shoot down Russian jets. They also said that the incursion into Estonia was deliberate, that they didn't accidentally fly into NATO territory, that they did that on purpose to kind of test what they could get away with, more or less. And Europe is saying today, we are going to shoot you down. Well, you shoot down a Russian jet? Yeah, that is a whole new can of worms that the markets have not really priced in yet. Okay, that would be bad. Now, I'm going to assume that World War III doesn't start in the coming weeks. Just going to assume that. Just going to go out on a limb there. But if you are someone that is concerned about this, maybe having a hedge on your portfolio isn't a terrible idea. Like, I could get behind that idea, but I think everyone wants to prevent a larger conflict. And on both sides here, it's largely just posturing. For Tesla specifically, you can see this headline that came out right at about the same time as that other headline came out. It says, Tesla urges Trump administration not to repeal vehicle emission standards. So basically, there's standards out there that, like, for an example, you can't have an SUV that gets 5 miles to the gallon, right? There's standards out there. Even if it's the coolest, biggest, best thing out there and people would like to buy it. There's standards, right? If they were to repeal that, you know, it maybe wouldn't be as great for Tesla. Maybe. Really hard to know that. I think Tesla just has a superior product overall, so I don't think it's something that would matter too much. But I think it's one of those things where, like, Wall Street is starting to come around to the idea that Tesla is not a car company anymore. It's more of an AI company. But then Tesla is, quote unquote, urging the Trump administration not to repeal vehicle emission standards, which kind of puts Tesla back in the spotlight as an auto company, potentially. That's kind of the way that I see it. Again, if this had come out on a day where markets were not already selling off, I don't think it would have affected Tesla at all. I don't think it's something you should pay a second thought to, personally. But it does line up to when Tesla really started to get a larger sell-off. And again, you can see this headline here. European officials see Russia's Estonia incursion as deliberate. This is also a bit of a weird headline as well. Fed Logan says the time has come to prepare for a new benchmark rate, which, does that mean like raising the terminal rate or the terminal, you know, inflation target? I don't know exactly what they're getting at here. But yeah, any way you want to really frame that, sounds like the Fed not really thinking they're going to get to target, okay? Potentially raising the inflation benchmark instead of 2%, maybe 2.3% or 2.5% is appropriate. That's what I see as Fed Logan really is saying here. Now, I do want you guys to listen to this clip of Fundstrap. Mark Newton, I believe he's like the second guy just below Tom Lee, on why he's bullish for October. Talks about NVIDIA, Apple, Ethereum, and small caps, which is directly applicable to Tesla.
Advisors and Managing Director Mark Newton. And Mark, so we've got an S&P chart up here. Obviously, he's made a huge move.
Right.
We know that you get the back and filling kind of thing. What kind of consolidation are you anticipating and for how long?
Honestly, I only think it lasts maybe 3 to 5 days at the max right now, and I think we probably push up into October. There is a really interesting phenomenon right now. We have this huge bifurcation because technology has done so well in the last month. The broader market has actually gone sideways since July. You look at the eco-rated S&P, we've made literally zero movement in the last 2 months where it's all been technology.
Right.
That's not troublesome necessarily if the broader market plays catch-up. And yes, we are seeing that in small caps, mid caps. But we need to see the broader market really start to recover. So I think that 67.25, yeah, I honestly, I think we only maybe pull back to around 6,600 and then we continue higher into October. Okay. We've ignored all the seasonal signs of weakness that were supposed to happen in August and September.
It's really amazing. I mean, this morning when we came in and we opened a little lower, I thought today was going to be a down day, honestly. It wouldn't have been a big deal if it was a down day, but it wasn't.
Well, historically, this is the weakest week of September after September OPEX.
Right.
Normal to see consolidation. Obviously, it hasn't started. Big breakouts in NVIDIA today, and also Apple moving up about 17 points in the last 2 days. That's 7%. These together represent about 15% of the S&P. Tough to see a big sell-off if these big tech stocks are fueling the rise. So
small caps up 7 weeks in a row. Yep. They did not perform last week, but they put in a good account of themselves. Is this the move now? Has the move begun that we've been waiting for?
100%. Look, it began in April. The small caps have outperformed the eco-rated S&P. Now they're outperforming the actual large cap tech S&P. You go back since 2021, we've had 2 big peaks now that have been exceeded just in the last week. That's very bullish for small caps. Everybody says, oh, tariffs are bad. Well, bottom line, look, we're going to cut about 5 times between now and next summer. That's very bullish for small capitalization companies that have huge debt to leverage, ratios. So they want rates to come lower. That's going to be happening. That's very good for small caps.
It really is. All right. So Micron reports, I think tomorrow after the bell. It's been absolutely on fire. Huge gap here. Moved from 120 to 170 just about in the blink of an eye. It's not the only one. Last week we talked about tech. but it wasn't the Mag 7.
That's right.
A lot of these second, third tier semiconductors are coming on and is reflected in this chart.
Yeah, it's two areas. It's the data storage area within tech hardware. So we have the Seagates, the Western Digs you mentioned earlier. And also we have, of course, SMH. We have all the semis that have come back with Intel now being brought back to life. And of course, NVIDIA today, big breakout. I think SMH probably gets to 325, 330, but it is getting very, very stretched. And you have to just, don't stand too long next to the punch bowl in the next month.
Listen,
but honestly,
look, a huge gap.
Yes, that's right.
Then it went up. So
look, the trend is your friend until it ends. And right now, there is no evidence of any trend deterioration. So it's tough selling because things are overbought. You have to stick with what's working.
Today, just just every day. It's
that's
like,
right.
And it's names that I used to know 20 years ago that kind of like,
right.
like
the Clacks, the LRCX, the LAMs, the semi-cap have come to life. It's been a remarkable recovery in semiconductor stocks.
I want to talk about your fund strat, the uptick. It's a product that you have.
That's right.
Because you're up 75%. You're up over 100%. You're up like 18%.
Well, it's 30 this year. It's up about 10% above the S&P.
But you're killing it since you've been in existence.
Surpassed the
You're
S&P. That's correct.
That's you've added 4 new names. I want to. This is under a little pressure. People are a little concerned about that today. But this is par for the course with the volatility for this kind of.
That's right. One does not need to be concerned about Ethereum. It should go no lower than 4,000. I expect to move to 5,500. I like Ethereum a lot. It's my favorite of the cryptos. Some of these have a little bit lesser market cap than maybe some of the large caps. So the Reddit, I think, is phenomenal. Robinhood and, of course, Shopify is set to begin a very good move up into October. So I stripped out a few. I added a couple. I think these are excellent risk rewards over the next couple months.
And I like what's on your watch list. This Kratos, I've been in it for a while. Subscribers up about 50%. New defense kind of play. You've got 2 quantum names here. Under a little pressure today, but I love quantum. Everyone on this show knows that. I want to ask you about HIMS. I just have 30 seconds left. This is it's got a cult following.
That's right.
And every now and then some news comes out. You say, oh, man, that's devastating news. They find a way to keep it going. And the people who believe in the stock say this is it. This is going to revolutionize the business.
I don't disagree. It's phenomenal technically. Long-term, big, giant base, and it's just been sort of churning. But this has tremendous future. I like HIMS and hers technically, as well as all of these. The quantums are a bit overdone, but any sort of pullback like you're getting today could present an opportunity for those that have the right time frame.
You've been killing it, so we're going to be watching these. Obviously, a lot of our viewers are already in INQ and Qubits. But HIMS is the one that I'm going to watch closer. It's been on my watch list for a long time. I've been in and out of it, but I like the way that's acting.
Thanks. Great to see you, Charles.
Thank you so much, as always.
So, it's safe to say Fund Strat is bullish for October. Again, I believe October is the 4th best month historically for markets. November is the 1st best. And December is the 2nd best month historically for stocks. So you are really entering into a good seasonal period, October, November, December. If this economic data holds up and we continue to get strong economic data with what I believe will be lower inflationary pressures into the end of the year, we're going to have a situation where maybe the economy does well, inflation comes down, the Fed can cut rates, and earnings have upside momentum and revisions likely coming. That is the best case scenario. That fuels AI. That fuels everything, especially small caps. And let's assume that trade deals get finalized, relations maybe get better with China. There was a report on that today that relations are starting to get better between the US and China, and that is good news. We are in an AI Cold War with China. We do not want more hostile tensions forming besides that. The AI Cold War is enough in and of itself. It's going to drive innovation. It's going to drive wealth. It's going to drive, new technologies. You don't want a Soviet era Cold War where there's basically a impending doom at any moment, right? On the brink of war. But you want the Cold War aspect of it where there's immense competition. The United States, by winning the Cold War, progressed decades faster than we would have in various different technologies because it was essentially forced innovation. Okay? AI is forced innovation. You just don't want to have tensions rising and that side of it, especially when we have trade deals that are not exactly finalized. So as long as we don't get some kind of big trade upset, yeah, we're going to have a very strong end of the year rally. And honestly, I have a cruise coming up early November, I believe. October, early November. The last thing I want is to be on a cruise ship watching the portfolio die. So let's just yeah. I'm hoping we do have a very strong end of the year rally. And at this point, it seems like the most likely outcome. And it looks like, in my view, Tesla is going to shortly be above $500 a share, in my opinion. So let me know your thoughts on this down below in the comment section. Hit the like button as well as subscribe to the channel. Thank you for watching. Enjoy the rest of your day, and I will see you in the next one.